Hello everyone. Welcome to IRMAN Talks. We are going to have a talk by Mr. Nilotpal Pathak. He is from PRM 18th batch and is a partner in Sagacia Growth Partners. The topic for today is impact investment ecosystem and its mainstreaming in India. This talk will be moderated by Mr. Amresh Mohan from PRM 18 as well. Without any further ado, let's kickstart this session. I request all the attendees to mute except for our moderator and the speaker. Also, I would like to again reiterate that this session is getting recorded. All right. Over to you, Amresh. Thank you.
Thanks, Pradnya. Welcome, folks. This is such an exciting time for me to be able to host this talk today. Nilotpal and I have known each other for 27 years, and we have two other batchmates here, Apurva and Dushyant. Hopefully, more folks are going to be joining soon. And they would agree when I say that Nilotpal was one of the nicest, smartest, most humble person in our batch, who's always ready to help everybody during the 2 years at IRMA and then after that as well. And I'll share a few anecdotes, and I'll invite Apurva and Dushyant as well to keep it interactive. Thankfully, we have a small group, so we can be a lot interactive. Nilotpal, very excited. Let's get started here. Impact investment and your role in it, I followed from a distance, of course, but it'll be amazing to unpack a lot of things that you have been working on for many, many years. It's a big topic. What are some of the things that we should try and cover in the next 40 minutes or so, and still keep some time for Q&A at the end?
So thank you, Amresh. Thank you, Pradanya. Thanks for having me on this, and thanks for your kind words, Amresh. So, as part of this talk, we are going to cover, just a second, it seems there is an issue. Just give me a second.
No problem at all. Would you like me to share my screen?
No, I think it should work now.
Yep.
I guess the screen is visible to all now.
It is, yes. All right.
So thanks once more.
Page.
Yeah. So this is what I'm going to cover today. A little bit on my personal journey over the last 25 years since IRMA, about the current landscape of impact investment, how impact investment has evolved over the last 20 odd years that we have seen it exist in India. What are the current challenges? And then I'll talk about some of my personal learnings. And then we will talk about what is the direction, where this impact investment ecosystem is headed. What are the various things that one can look forward to? So that's what I'm going to cover. I'll be happy to keep it as interactive as possible, and maybe we can have part of the time dedicated to the questions and answers towards the end.
This is a great outline, and I'm sure audience will also sort of bring up other points as we go along. Yes, personal journey.
Yeah, so PRM 18, year 1999. Then, of course, I did CFA when I was still working at Bahrain. Started my career.
Let me ask something here, Nilotpal. So you ended up taking finance and then later impact financing as a career. Was that the plan when you came to IRMA? Did you have a quantitative background? Did you come in thinking about doing that?
I did have a bit of quantitative background in the sense that I did my graduation in physics honors. But then, I knew nothing of finance when I joined. In fact, that applies to most of us. I knew nothing of finance. It just happened that we had some great faculties at IRMA, starting from Rajesh Agrawal, late Professor Siladitya Roy, Janardhan Mamtora, Sailesh Gandhi, great, all of them great faculties. And they actually helped develop my interest in the subject. But, at the beginning, I never had any such plan. I'm 100% sure that that applies to most of us. But for me in particular, that was definitely not the plan. When I joined NDDB first, as my first job, I got placed in the oil project finance team over there, and worked there for 2.5 years. Then I came over to MCRIL, where incidentally one of our batchmates, Arshad, was already there, and he was instrumental me in pulling there. I was there for almost 5 years, and I believe part of this interest in impact finance, and that too in the hindsight, start building over there. Microfinance was still at a very nascent stage, and we used to do rating of microfinance institutions, credit rating of microfinance institutions in India and outside India, in parts of Southeast Asia. And that's where, the initial interest in the subject started happening. Then in 2006, I got married, and the travel that the job required was not possible anymore. So I moved to Bahrain, and my wife was in US at that point in time. And that's where I got into the investment world. I mean, until MCRIL, I had zero idea of how the investments happened, how the investment ecosystem functions. From 2007 to 2011, if you people remember, that was one of the most turbulent times of investments across the globe. I mean, the Lehman Brothers crisis happened around that time. And I was witness to lots of things that was happening in the Middle East around that time. Huge liquidity because of highest ever oil prices, and European assets were up for sale, and Middle East money was available. They were buying it left, right, and center. And suddenly, when this Lehman Brothers crisis happened, everything came crashing down, and it was really a tough time. But I'm really glad that I managed to do some very interesting work. In fact, some of
Let me
the
ask you.
investments.
Let me ask you
Yeah.
something, Nilotpal. When you went from large institutions in India, NDDB and MCRIL, to a major international finance and banking institution in the Middle East, did you feel prepared? Did you feel that your academic and professional grounding held you against all the international peers in that environment?
It was challenging. I will be lying if I say I was 100% prepared. But in a way, exposure at MCRIL helped immensely, because we were working with international institutions such as ADB, IFC, Responsibility, Blue Orchard. So these were some of the international institutions I had already interacted with. So I had some idea of how the investment ecosystem functions. But given that I was coming from a completely different background, I was underprepared for it, and that's why that was part of the reason why I decided to take up CFA at that point in time, and that definitely helped. But more than the academics, it was the overall learning that I had as part of my job. That helped me in a tremendous way. In fact, some of the works that I did as part of some of the investments that I made were really fabulous. One of the major accomplishments that I consider, and that's where I think I moved away from what could have been the part of the larger impact investment ecosystem, that is microfinance, to mainstream international investments. One of the things that I did, which I consider as one of my key achievements, was to set up this Bahrain Innovation Fund. What Bahrain government at that point in time wanted to set up a small fund wherein they could have invited all the major innovations from across the globe to Bahrain, and the idea was to, you know, uh, get them to set up their offices in Bahrain and operate from there. The fund was relatively small, 50 million USD, but since I, right from conceptualizing it to raising the required capital, of course 20% of it was committed by the Bahrain Development Bank, which is a government institution. Right from there to raising the remaining $40 million was quite an experience. And I was we had a couple of portfolio companies also at that point in time, which I helped manage, as part of my work. So in that sense, the whole experience was very, very enlightening, very, very, it opened my eyes to lots of things. But at the end of 5 years, I felt extremely comfortable. And in hindsight, I feel that it was a great opportunity, great learning opportunity for me.
That's amazing. You started in microfinance, project finance, put yourself against everybody else on international markets, did your CFA, deepened the subject matter expertise. And then, as you've said, back to the roots. What drove that? And how has that journey been in the last 12 years or so?
So, again, most of the things, if I look back, most of the things have happened without any plan. I mean, I decided to come back because the socio-political environment in Bahrain at that point in time was bad. If you remember, I'm referring to the times of Arab Spring that started in the February of 2011 and continued for almost a year. So there was a time when things were going out of hand in Bahrain, and that was around the time when I decided that I should get back to India. I came back in December 2011, and within a couple of months, I had an offer from Intellicap Avishkar Group. I joined there, and I continued there till 2016, almost 5 years again. And it was again a great learning experience. In fact, one of the major accomplishments and one of the first accomplishments, and I'm so glad that Subhankar is here on this discussion today, was the acquisition of IRMAN for Avishkar Group. It was at that point in time, it was built with lots of passion, lots of love by the Subhankar and his team. And the organization was struggling because of the macro crisis that, unveiled on account of, some Andhra crisis, what they call. And the group took over and they helped it revive with the help of Subhankar and his team. And today it's considered, it's actually one of the biggest microfinance companies in the country today. Apart from that, I also helped set up the agribusiness investment advisory team. We also helped set up one mezzanine fund advisory, which was meant for a large international foundation. And it was supposed to be an international fund. It's currently functioning as part of Avishkar right now. So these were some of the interesting works that I did at Avishkar. I moved on from there and came to Gurgaon as part of iFarms in 2017. One of the major works that we did as part of iFarms was to help set up BSE agricultural markets in 2021 March. It's a joint venture with Bombay Stock Exchange. We helped set up the commodity exchange, agri-commodity spot market for BSE. And initially, the shareholding was 40-60, 40% with iFarm, 60% with Bombay Stock Exchange. We are currently operating it. I took over as interim CEO for 1 year in between. The second major work that we have accomplished as part of this journey was to set up a financial inclusion fund, Sagacia Financial Inclusion Fund. We are going to do the first closure of this fund later this month. So it has been an exciting journey so far. It continues, and I hope we have more, many more interesting works to follow. Everything that I have done so far.
Thank you for sharing. Before we move to the next, if I could ask you on the previous slide, Nilotpal, after accomplishing a lot in India, then international markets, you talked about a lot of interesting projects, then back in India, what prompted you to then go entrepreneurial? This is always, it's not just about knowing the market or having the professional expertise. There is a significant amount of risk taking. Can you tell us a bit more about that?
So I had spent 5 years in Aviskar. They were the extremely exciting times, and then obviously I wanted to do few things on my own. I felt that food and agribusiness was an area which was not adequately covered by the existing investors. We actually wanted to do a climate tech fund back in 2016. Somehow it never took off. So, and around the same time, I was having a discussion with Mr. Sanjeev Asthana, who is currently CEO of Patanjali Foods. He was the managing partner at iFarms. We were having this discussion, and we decided to, set up a private equity fund focused on food and agribusiness. We worked together for close to 6 years, and BSE Agricultural Markets is actually an outcome of all the work that we did in the course of those 5-6 years. So the idea was to, experiment few things that I always wanted to do, and somehow the institutional setup of a large group doesn't allow that kind of freedom. I mean, Aviskar is a great organization, lots of respect for them, but somehow I felt that possibly moving on from there and getting into a smaller group would help me exercise that option in a better way. And that was the whole idea. In fact, even the entrepreneurs, I mean, I call it entrepreneurial journey, but it was never planned like that, I would say. I mean, it just so happened that it has become 7 years down the line, it has become an part of my entrepreneurial journey. But, even in 2016, when I was going to get into iFarms, it was never envisaged as, something very, very entrepreneurial.
Thank you for sharing that. I'm looking forward to hearing more about BSC, Sagacia, etc. Yeah, let's carry on to the next.
Absolutely. So, moving to the impact investment, so how is it defined? The Investopedia defines it as, you can read it. Impact investing is making investment to help create beneficial social or environmental effects while also generating financial gains. Very simple. You need to have financial gains while you're also looking to help create beneficial social and environmental effects. Very simple. Now, in the backdrop of this definition, there can be multiple, asset classes. There can be multiple instruments to create this, such as bonds, shares, loans, all types of structures. So the impact investing, the way it is envisaged, and in fact, the first lens that you use to define impact investment is the intent. And when I say intent, it's essentially about the social impact and the environmental impact. So you can have any instrument, and you need to have a positive financial outcome. So and now the debate is, which I'm going to cover as part of this discussion, with if the amount that we are talking about is going to be adequate, the kind of returns that we expect is going to be adequate and competitive enough. But at the core of it is the outcome. And when I say outcome, it's more about the social and environmental outcome. Of late, it has got some subsets. different forms of impact investments are emerging. ESG has become a very, very actively talked about subject. Socially responsible enterprises and investment around them is equally important. And the one thing which I have not mentioned here is this investment in the circular economy. So as part of the desired social and environmental outcomes, all these things get covered. And if we look at the way it has evolved in India, and I think many of us have been part of this story, the commercialization of microfinance that started, from 99, 2000 onwards. And it made significant strides in the first 5 years. And as a result of that, what used to exist as societies or non-for-profit institutions, they started getting converted into NBFCs and for-profit institutions by end of 2004, 2005. Then, if I remember correctly, and in fact, Subhankar, who is part of the audience here, he will agree. Possibly IFC's investment into basics was the first recorded impact investment in India. It was a very small amount, but that was the most significant investment I consider in this space. And that started opening the door for commercialization of microfinance and getting the mainstream funds from the banks and in the form of debt getting into this space. So from 2005 to 2009, lots of funds were set up. Fund managers opened their shops in India, and they started investing primarily initially into microfinance. And subsequently, once they start realizing that there is more opportunities available, and putting all their eggs in a single basket of microfinance is not going to work, they started diversifying. And some of the sectors that they focused on initially was agribusiness, healthcare, education, and so on and so forth. And Avishkar definitely was one of the pioneers over there. Lok Capital was there. They made some really interesting investments in the impact space. LAR, Caspian again, one of the pioneers again, one of the first funds to get set up and start investment in the microfinance. So up until 2009-10, it was a dream run. Lots of interesting things happened around that time. In fact, one of the major events of that period, and which I have not mentioned over here, was the IPO of SKS Microfinance. If you people who are associated with microfinance, they would remember that event, how much debate it generated in the whole social circle, because at that point in time, lots of things were not considered appropriate, especially getting into the for-profit behavior. And also, the whole purpose of microfinance was expected to alleviate the poverty. And here's a group of investors who were trying to encash that in the capital market. And it didn't go down well with the, with lots of people at that point in time. But then, as they say, the mainstreaming of the impact investment possibly started around that time. But then there was a setback. And in 2010,
Quick question there,
the Andhra crisis
Nilotpal.
happened. Yeah, Amrish.
Quick question. What the diversification, was it because of the challenges in microfinance, or was it because of the success of microfinance that other sectors also started to get the money?
Initially, it was definitely not the challenges in the microfinance. What happened that all these funds that I have mentioned earlier, be it Avishkar, LAR, Caspian, Lok Capital, nearly 100% of their investments was in microfinance, at least for first 3 years. Then they realized that they have 100% exposure in a single sector. And that's when some of their LPs pointed this out, that you should start looking beyond it, because it's not good to put all your eggs in a single basket. And that's when each one of them started looking at opportunities beyond microfinance. And suddenly in 2010-11, Andhra crisis happened, and the entire microfinance sector was in trouble because of that. And so in a way, while they were preparing to diversify, this crisis happened. And I mean, obviously it hurt the crisis it hurt the sector very badly. Lots of institutions suffered because of that. And because this was first of its kind, a problem of, I mean, the sector had not faced a problem like that in the past, and it was not prepared to face it. So, but then people learned very fast, and as a result, uh, lots of funds diversified their, they changed their strategy and they started diversifying into other sectors. And from 2011-12 onwards, other sectors started getting attention. So agribusiness was among the first ones to get attention. Edutech, or the education, the way it existed at that point in time, was the other which got benefited. Healthcare was another sector which got lots of investment around that time. But from 2016 onwards, technology started playing major role in the impact sector. Financial services, or the financial inclusion, turned into fintech. Then the whole buzz around the agri investments started, and what used to be agri investment turned into agri tech. Education turned into edutech. Health turned into health tech, and so on and so forth. That was also the time when lots of things were happening in the renewable energy space and the energy efficiency space. So in fact, that was the time when lots of exciting stuff started happening. Lots of diversification also happened on account of that. And around the same time, lots of overseas LPs who were operating through funds in India, they started opening their shops in India. So CDC, what used to be based in London, in 2014-15, they started their first office in India, in Bangalore. Today, of course, they have multiple offices in India, but at that point in time, they started their single person office in Bangalore. And today they are actually one of the biggest players in the impact investment space in India. Similarly, FMO didn't have any presence. IFC had its presence right from the beginning, but they started with a clear focus in the impact space around the same time. In fact, at the peak of the crisis, they had the courage to make their investment in Bandhan. What is Bandhan Bank today? It used to be an NBFC, and in 2011 they were the ones who made that investment. So it was a very courageous event, and in fact, it was a great gesture on their part to exhibit that kind of faith in the sector, and it helped the sector in an immense way.
So from starting as very, very different, just in a small microfinance focus, to now with tech coming in and diversification, it's starting to feel a lot more mainstream. There's still some differences between what gets funded in impact investment, what gets funded in mainstream, etc. So it'll be great to unpack some of that as well. And Dheeraj, you have posted a question. Do you want to ask live? We are a small group, so we can take advantage of that. Do you mean to ask about learnings to create more impact? Is that the question, Dheeraj?
I think I am not Dheeraj, I am Subra.
Oh. Hi, Subra.
Hello.
Yeah, Pathakji was being, I think he's anchoring in teaching lot of institution. So Pathakji, soiling your hands in the finance and now trying to teach more things to the students. So how do you feel, and what is your future map on this? Can you elaborate?
No, so I take, in fact, for the last couple of years, I have been teaching a half credit course on impact investment at MDI Gurgaon, with one of the existing faculties there. So it's on the second year that I did that. I do some guest lectures at some universities. So it's interesting. It's exciting, and it always helps to interact with the students and people who have who have very open thought process. So in a way, it's very enriching, but at the same time challenging also, because you need to be on your toes. Unlike a regular job where you can have a relaxed day, while teaching you cannot have that. In fact, Sasi Bala is here. She regularly teaches. She is actually a faculty. I'm sure she would agree with me. Teaching is while it is exciting and very interesting work, it has its share of challenges. So I'm enjoying it. I'm having a fun time while doing that. So yeah, and in future I hope I continue to do that.
Yeah, I think
Very
best wishes. I think you can the other way how you have did fantastic in the finance, so probably you would be able to do. And we are expecting that you should be IRMA should invited you as a guest faculty, or you may take some courses in the IRMA also. That's what
Yeah, I
we.
hope so.
Yeah, let's continue. Yeah.
Yeah, thank you, thank you.
Welcome.
So so that's what has happened so far, and some of the features of the current landscape. Let's talk about that. So if you look at the current landscape of impact investment and compare it with the other sectors, the mainstream investments, the focus has largely been to catch these funds early, these enterprises early. But unlike the mainstream funds, we do not, we hardly have any seed or angel fund focusing on impact sector. In fact, the only organized fund that I see is Ankur Capital, which makes you know I mean it's not even angel, it's actually pre-series A investments that they make. Their ticket size is actually around $2 million. So we hardly have any seed or angel fund. We used to have at Avishkar, when I was there, we used to have Intellicap Impact Investment Network, which was an angel network for the impact sector. It's not very active anymore. But apart from that, we hardly have any seed fund. And in fact, that's one area where I think some work needs to be done. There are incubators though who make small investments of few lakhs, less than a crore, but certainly that's not going to be adequate for the kind of funding that is required for the impact sector. Uh, so that is one area which I think has been the challenge. But most of the funds actually try to get very early. But of late, all of them, because of the economic compulsions, they have started focusing on larger ticket investments, and it applies to nearly all of them, be it Avishkar, be it Elevar, be it Lok Capital. Caspian is the one which has got lots of very bright Edmonds working over there. They have recently set up a fund for agribusiness, which looks at small ticket investments, but possibly they are the only ones who are doing it in that ticket size. And points towards the sector getting more attention, more maturity. It also points out that there is a need to have more seed and more angel funds focusing on the impact sector. The other interesting phenomena that has happened.
Would it be fair to then say, Nilotpal, would it be fair to say that that could be one difference between mainstream and impact investment, that the risk taking from investors is still a little bit low? You typically see the venture folks taking on a lot more unexplored ideas is where they invest their money. Looks like, as you said, that the seed and angel fund is missing here, and the venture stage funding for things that have already proven themselves. So would that be one sort of a gap and a difference between the impact investment and the mainstream?
One major difference, of course, one major difference, because and please note that these funds who are doing growth stage investments, earlier they used to be uh, early stage investors. So they have now matured themselves, but because of the economic reasons and pressure for their own growth, they have decided to focus more on the growth stage investments. But then that also means that the opportunity is large, the market is big, and it requires that kind of investors who can do seed or angel kind of investments. Now, the other challenge which I must point out, see, impact sectors by their own nature, the gestation period is long. It requires more patient capital. Whereas in the mainstream, there are sectors where the turnaround can happen very fast. Within 3 years, 4 years, the seed stage investors or the angel investors can take their capital out with, with a decent yield. Unfortunately, the impact sector has not gone through that, that kind of innovation. I'm going to talk about it in the later part of the presentation. One of the reasons which I feel for that to happen is the lack of product innovation. In fact, there has been hardly any innovation as far as the product designing is concerned for the impact sector. We have actually picked the instruments from the mainstream sectors and simply replicated it over here. So that's the biggest challenge that I see. And in fact, that's one area where lots of work can be done and should be done. It's not that the mainstream sectors have been, or mainstream funds have been very, very innovative in coming up with, new products for the impact investment. And that's been actually a little sad given the kind of challenges we have seen the larger investment ecosystem has been facing. I mean, if you talk about the challenges in the larger ecosystem, one of the biggest challenge is the uncertainty on account of the yield and the investment horizon. And it's not that this problem has come up today. It's been there for the last 10 years. And yet we have seen very, very limited, work being done on the product innovation. So that's one area where I think, if that is a challenge, then obviously people are working on to come up with some products. And in fact, when I talk about Sagacia, it's actually an attempt towards that. We are working on a product which is an investment product, and yet it's different from the conventional one.
Got it. The call out here is for all of us in the IRMAn community to look at more of the seed and angel round for impact investment, because that's a gap currently, the more risk taking that can happen. How about we switch to the challenges side on impact investment?
So I'll continue on the current landscape for a while, and then I'll move to that. So what has happened over the last few years that we have lots of sector specific funds, the ones who are focusing on agriculture, the ones who are focusing on financial inclusion alone. Some of them have started focusing on either hybrid models or 2 or 3 sectors such as agri and finance and education and all. Then there are some who are, while focused on the impact sector, they are sector agnostic. I mean, they can look at energy efficiency, they can look at renewable energy, they can look at financial inclusion, they can look at agri-tech, but they will use impact as a lens, as the primary lens for making any investment. Then there are funds who are focusing on the geography. Lots of funds are actually focused on low income state, especially the ones promoted by DFIs like SIDBI and all. They focus on low income states. There are funds who are focused on state only. For example, we have an agribusiness fund for West Bengal. We have an agribusiness fund for Assam. We also have an agribusiness fund for Maharashtra, which is managed by SIDBI. But the LPs come from all types of institutions, be it international DFIs or the family offices or the foundations, international and domestic and international foundations. And one of the major phenomena that we have seen happening is the mainstream funds going impact, and that's actually a big event. In fact, as we talk, Suzuki has set up its own impact focused fund for India, wherein they are looking to make, small ticket investments, small ticket as in $4 to $5 million at early and growth stage companies. So Suzuki being what it is, they want to do good work in India, and they have found an opportunity over there. Similarly, CDC, which is now BII, they used to make investments of all types in India. IFC has made all types of investment in India, but now they have a very clear focus towards impact. And as far as the investment methodology is concerned, they have aligned themselves completely to ensure that the impact gets as much importance as the other important parameters, such as the returns, such as the governance, such as the financial discipline and all. So that's a major thing. That's a major event, and I just hope that these are early days. Even though going forward, we have more money flowing into the impact sector than what is happening right now. The other major event is the circular economy and ESG. ESG has been there for last 4 or 5 years, but circular economy is something new. It has been there for the last 3 or 4 years, and there are funds being set up just to make investments in the circular businesses that are doing circular work. And overall, I would say the current landscape looks very, very exciting, very, very, it offers lots of hope, basically. Now, moving to the challenges. So this is, the LP's motivation is very, very important. I mean, so while lots of people talk about different things when it's about their motivation to get into this space, but at the end of it, it's the commercial money which gets into investment, and they also have their accountability. So on account of that, clearly the impact sector requires more patient capital, and given the challenges we have in the larger ecosystem, because of whatever reason, LP motivations are never stable. On top of that, the benchmarks, while it is available for the mainstream sectors, do not apply to the impact sectors. So in terms of valuation, in terms of financial yield, in terms of progress, we will always have issues regarding that. Also, the growth expectations, given that most of the LPs come from the commercial background, whether they are CDC, BII, or IFC, they have certain pressure as far as the growth expectation is concerned. And we have seen that create problems in the past. The regulatory framework, again, has been a challenge. In fact, recently, the regulation for the mainstream funds are identical for the impact sector. And whenever there is a change in that regulatory framework, that affects our work also. Just a small example, in November last year, RBI made a change. In fact, it was not even a change, it was a directive from them to the banks that they cannot invest in AIFs. And if they do, they need to make adequate provision on their balance sheet. And if they do, they cannot do any lending to the downstream companies. Now that has created a major problem, because the whole motivation of the banks while participating in a fund is to create a pipeline for their future lending business. And if the regulator prohibits them from doing that by putting restrictions like the required provision, that doesn't encourage them to participate in AIFs. So that affects the overall impact investment ecosystem. As I told, there has been hardly any customization or product innovation in this sector. The other major issue is the changing narratives. So if we have followed the impact investment ecosystem, in 2010-11, the buzzword was around financial inclusion. It changed towards gender after 2-3 years. From there, it changed to energy efficiency and energy access. From there, it changed to sustainability. From there, it had changed to, climate tech. And today, climate tech and circular economy are the major drivers. Nothing wrong in any of these narratives, but it's being driven largely by the UN and the DFI foundations, and the domestic fund managers need to, basically follow that from the close corners. Otherwise, they would be left behind. So that has been a major challenge, not so much from an investment point of view, but to, whenever we are looking to raise new funds for our purpose, we essentially need to align ourselves with the larger international narrative around the impact investment.
Before we move to the next part, I wanted to ask here on the LPs part, are LPs different? And is it different type of LPs in impact investment, or is it more about an allocation? They are allocating a certain amount to mainstream investments and some percentage to impact. And we hear about double bottom line, triple bottom line, etc. Are they expecting different things?
No, so it's about, once the company gets matured, so impact is the first filter. Let me put it like this. For any investor, impact is the first filter. So there are funds who have that kind of, guidelines, whereas there are some like IFC, BII, FMO, who have a more rigid, more regimental approach towards that, wherein they want to focus on the impact as much as on the financial parts. So to that extent, answer to your question is that yes, there are funds who are focused more on impact than the others. But the moment an enterprise becomes big and it has been successful and it is seen as creating value, it is, it's part of the mainstream. And in fact, one of the case studies that I talk about, Milk Mantra, in fact, it was one of the earliest investments from Avishkar in a dairy company. For the first 3 rounds of the capital raise, it was only the impact investors who made the investments. The moment the brand became successful, the company was successful, it came up with new products, it started generating interest among the mainstream investors. And today, the company is, all the major investors are mainstream investors over there. And they are doing a fabulous job, no doubt about that. But then it's essentially about taking risk. So once the enterprise is successful, at the growth stage, you will have mainstream funds coming for something like that. So I hope I answered your question. It's essentially about
that makes sense.
2 parts, taking risk and 2, approaching it.
So lines are blurring. As something becomes successful, it attracts both types. Okay.
Absolutely.
Just a quick call out in terms of time. We are at 6 minutes left to the talk, so, and I believe you still have a lot of content.
Yeah.
Folks who've joined late, please feel free to ask questions live. We are not keeping separate Q&A. We can keep it interactive as we go along. Did you want to talk about any of the case studies, Nilotpal?
Yeah.
You mentioned
so
one.
I'll jump to that. For some reason, the screen has frozen. Let me just try it.
Meanwhile, there is a question from Prasann. A lot of non-profit. You want to ask live, Prasann? Might be better.
Hi, Amresh, and hi, Pathak ji.
Hi.
Yeah, I have put my question on the chat. I am in a noisy place, so I don't think I can repeat that. But just to be brief,
I'll read it.
Yeah.
I'll read it for you. Don't worry.
Thank you.
So a lot of nonprofits depend on CSR grants to raise funds for their micro enterprise or SHG-led enterprises. what do nonprofits have to do to tap impact investment funds?
So first of all, they need to turn into a for-profit entity, at least, for the sake of regulation. That's the most important thing. They need to change their, organizational, institutional form. So it needs to be a private limited company. Then, if the purpose is good, if the, and the second thing, by the way, the CSR and the non-profit entities, because of their structure, they cannot invest in the for-profit entities. So there are enough impact funds available right now who, if presented a good opportunity, can invest in in such entities. But then at the same time, there are institutions like CASPOR, which has been a out and out non-profit entity since beginning. They have created their corpus over a period of time and have created impact. But they have been there for last 27 years, and yet they have created some impact. But with the help of more commercial and more impact funds, they could have done better.
Yeah, thanks. Thank you.
So, I mean, I'll nearly, I think all of you would know about how Avishkar in telecap ecosystem has evolved. I mean, it was a very small outfit. The first fund that Avishkar had launched in 2004 was of 25 crore. And today the AUM of the group stands at around, nearly $750 million. They have a presence in Africa, they have presence in Latin America, they have presence in Southeast Asia. So they are managing multiple India and overseas funds from India. And, they have helped create this whole ecosystem around the impact investment in a wonderful way. I'll very quickly move to the next sector, which is, I'm having issues with my PowerPoint.
Do you want me to try to project?
Mantra. Milk mantra is important from the point of view of
I can project Nilotpal if you want.
Yeah, you can try that, but I'm just, yeah, it's loading now. So
Okay.
Milk Mantra is important because it was first of its kind in India. The company was set up in 2008. It raised the first institutional round of investment in 2010, and it did 2 more rounds of institutional fundraise from the impact investors. Now, if you look at Odisha, Odisha is neither known for a milk producing state, nor it is a milk consuming state. But it is only an impact fund which can invest in an entity like that. Today, it has attracted investment from all types of investors. All the mainstream investors are there on their cap table. It has created massive impact in terms of offering livelihood to farmers, and it has attained profitability. It has attained a scale also. It has created a brand. It has offered exit to at least 2 to 3 rounds of investors. But had it not been for Avishkar and the likes of them, possibly it wouldn't have been possible for them to attain this kind of a scale. So the point that I was trying to make earlier, Amresh, in response to your question, was about, if it is attractive, why don't the mainstream funds get behind them? So the point is that the initial risk needs to be taken by the impact funds only. Now, if the risk is high, which is obvious, ideally the returns should also be higher, but that has not been the case. And that, I believe, is the major impediment for the mainstream funds from getting into this space. But if you look at the overall portfolio of Avishkar, and since I know about them, I can speak for them. I have worked there in the past. They have their average yield, especially on microfinance and some of these early agribusiness investments, it's been very, very good. So I believe it's about more than impact. We need to evaluate, and in fact, is the first filter. Once you cross that, it's the business model which is very, very important. So by its very nature, you are taking very high risk. The returns need to justify that kind of risk. And some of the investments like Milk Mantra and all the microfinance investments that they have made, the returns are actually fabulous. They are actually better than some of the mainstream funds. So in that context, I would say that results are actually very, very good, very, very encouraging also. But then you need some champions for the sector, and in fact, Vineet Rai has been a big champion for that. And today, Impact Investment Council is doing a very good job of that. So to that extent, I'm extremely hopeful. And before I talk about anything else, let me also talk about something which is very close to my heart, and this is part of my learning also. That is BSE agricultural markets. And if others know or not, Amresh and some of my friends from PRM 18 are actually one of the early investors into this company, and I'm extremely thankful to them for believing in the dream that we had at while setting up Beam. So it was one of its kind commodity spot e-market that was set up with the active support from Bombay Stock Exchange. Now, in terms of the work profile, it's still early days for it, but overall, it's looking to create an ecosystem wherein we get different types of commodities traded on the marketplace, while creating a larger ecosystem around it, which enables the transactions in an efficient way. And we are extremely hopeful that the leadership team at Beam would take it to its logical end, and it will create an institution which has helped bring down the inefficiencies and market asymmetries in the larger agribusiness ecosystem. Now, this is an interesting area. So obviously, as I said, the impact investment is moving from margins to mainstream, and lots of mainstream funds are setting up impact investment arms. The sunrise sector, fintech, I mean, the financial services used to be, financial inclusion used to be there. But in the last 7 to 8 years, fintech has been the major recipient of funds. But not all fintechs have impact as their primary focus. But the moment these fintechs start looking at MSMEs and micro loans, the impact becomes inherent. Agritech has been there. It has created massive impact. And if we look at the business models within Agritech, nearly all of them are very fast turning into agri-fintech. In fact, Arya Collaterals, again promoted by one of my close friends, Prasanna Rao, they are considered one of the pioneers in that space. EduTech, another sunrise sectors, not in news for good reasons of late because of what has happened in Byju's. Clean energy, another area which I believe requires huge amount of investment. Circular economy, not many people know very well about this, but I believe going forward in the next 10 to 12 years, this will be an area which everybody would know about and would talk about. Now, the bigger challenge when we talk about mainstreaming the impact investment is about the valuation. So I started off by sharing the SKS microfinance story, wherein the company got listed in 2008, and back then it created massive controversy in the development world. People were questioning the intent of the promoters and the investors, early investors. But the truth is that had it not been for the success of SKS microfinance, possibly we wouldn't have seen the kind of fund flow that the microfinance sector has seen. Today, the whole sector is has outreach of more than 9 crore, if I remember the numbers correctly. The overall size is 3,50,000 crore rupees, which is massive, which might not be huge percentage of the Indian financial services system, but in terms of outreach, having access to 9 crore households is no joke. So we need to ultimately have a balance over there. The impact is important, but IRR is no less important. Returns are equally important. We cannot ignore if we ignore the returns if we want to create an impact. And to me personally, impact is the first lens that I would use to evaluate any opportunity. If I don't see impact, I will not do any further evaluation. And I think that applies to most of the impact investment funds and their work. So I will stop here and I'll welcome all types of questions from you. Thank you.
There are two questions. Thank you so much, Nilotpal. There are two questions from Shubhankar. One is on what is circular economy? And feel free to ask live, Shubhankar, you're here, but I'm just reading your question. Let's start with circular economy question first. What is circular economy, Nilotpal?
Okay.
If you can expand.
Yeah. So circular economy is, it's about sustainability. We have lots of, and this is just one of the examples. We create lots of plastic waste. And we don't know what to do with that because it doesn't degenerate on its own. Now, there are innovations which help create different useful products out of those plastics which have been already used. So, in a recent interview, Prime Minister Mr. Modi was talking about his jacket, which was made up of used plastic. So today we have garments being manufactured out of used plastic. Not many people know about it, but that the whole sector around that, whole ecosystem around that kind of source of material is very, very active, and that's a huge opportunity. And the whole idea is to encourage that sector, that economy around the circular consumption. So circular economy is essentially that, and there are multiple business models, multiple businesses who need capital, who need patient capital, and it's something that we need. The whole earth needs that. I hope I answered that your question, Subhankar.
I've also seen articles and videos coming up on shoes. There is a shoes company in India as well, recycle plastic, and there's also replacement of plastic, and in a way that it can be reused much easier than plastic, because plastic reuse is also not super easy.
Then there is this whole concept of biodiesel. So basically, the used oil in soaps, they are refined further, and they are used as as diesel for running machineries and all. So that's another form of circular economy. So there are businesses around business models which help use the used oil as biodiesel. So there are business models around that, businesses that aggregate that kind of oil and refine it and then use it as fuel for consumption.
The second question is how important. Right. The other question is how important is line of sight on exit for seed and early stage investors?
Extremely important. I think one of the reasons why we do not see many seed and angel funds in this space is because the exit is not visible on day zero. Whereas in mainstream funds, not that they have performed any greater, not that they have performed any better on this parameter, but at least in impact sector, we do not have many business models where the exit is as much visible. So I think for enterprises also, it's important to have that as part of their story ready. So, whenever I am advising an early stage enterprise, I make sure that they talk about the potential exit, maybe be it 3 years down the line, 7 years down the line, or 10 years down the line. It needs to be talked about, and businesses need to be aware of the concerns that the investors might have. So it's very important. And once we have,
Nilotpal,
hi Subhankar.
yeah, just sorry to step in a bit. But my doubt is with regard to especially, startups, early stage investments, especially in areas whose viability is not yet established. For example, if somebody is setting up a microfinance company today or a housing finance, I think the viability of the business, etc., is established, right? But then if you are, let's say, getting into, let's say, ecotourism or something around that, okay, does it work? Is it scalable? I'm not sure these questions have been answered as such today. So therefore, what exit are we talking about? And that's a risk shouldn't the early stage investor be willing to take? People, when they invested in microfinance or I don't know, any of these dairies and all 15 years ago, they're probably open to the idea they might actually lose their money or they may get stuck. There's nobody to buy them.
So if I hear you correctly, Shubhankar, you are talking about this this conundrum around the viability vis-a-vis the impact, if I hear you correctly. And in a way, I was trying to respond to that when I said that for me, the impact is the first filter. So if I'm an impact investor, impact is the first filter. If the impact is there, then I will, focus on the other parameters, which are possibly as stringent as any mainstream investment would be. So once I clear that filter, I will look at any investment proposal with the same kind of scrutiny. Now, that's where the role of innovation in the business model is very, very important. If if a business is not generating the kind of returns that the investor demands, possibly we need to look at the business model in order to have the money attracted towards that. And I know that it has been a challenge. It's not easy, but the fact also remains that the mainstream businesses also struggle on this count. I mean, we know that there are mainstream funds who have struggled as far as their investments are concerned. So it's this problem is not unique to impact sector alone. It's talked about more in our context because our business models require more patient capital, and by its very design, it is associated with with this kind of problem wherein the returns as well as the impact are often compared. So essentially, we need to look at the business models more critically, look at the potential innovations, and then try to find a story which is more attractive to the investors.
So the emerging or untested business models or areas would always carry that risk as well as the returns, whether it is the mainstream or an impact. And as you showed in the impact side, there is a bit of a gap on completely new business model, completely unexplored, which is where Shubhankar's question is more. Things like microfinance have proven themselves. Things like microfinance have already proven themselves. But if someone has to come up with a completely new model or new idea, which is where the gap is, the venture funds are going towards also something that is established. is it primarily the impact objective that a seed or angel investor should then come in for, and then the returns could happen as part of it?
So essentially this, we need champions essentially for anything new to emerge and be successful. We need champions. In fact, Vijay Mahajan did a great job of, championing the microfinance alongside people like Sanjay Sinha and Vineet Rai. They did a tremendous job of, championing it. Today, impact investment needs something like that. Vineet Rai is there, but we need at least, 10, 15 more people like him. And Impact Investor Council is actually doing a very good job of that. But we need champions who can take it, who can make it more, mainstream in future. And when I say taking it more mainstream, I essentially mean taking them not just to the LPs, potential investors, but also to the, regulators, to the policymakers, to the other stakeholders of, economy. Because ultimately it needs approval from nearly all of them.
I feel like the biggest champion today for impact across the world is the new generation of folks. From my own personal experience of taking my last company public, and as you were speaking with potential institutional investors across the world, the percentage of impact investment that went up in the last 5 years alone globally has been incredible. And it is driven by employees and then consumers who are making a lot greener choices, who are a lot more conscious. And to me, that seems like the biggest opportunity. As we learned in the last hour, we're actually significantly over time, but it's been very engaging conversation. As we learned that, folks like Suzuki, Fidelity Growth Partners for Milk Mantra, and many others came in for the returns. But what's bringing a lot more folks in impact investment is really impact. And it's a whole next generation of consumers and investors. So that conundrum that you talk about is a lot less. The new investors, new consumers want impact and investment, not just investment, whether it comes from impact or mainstream. Would that be fair to say?
Yes, I agree. I agree, and as I say, I'm an eternal optimist. So I hope that this trend continues, because from what we have seen in terms of the trend, it's moving in that direction.
Good evening.
Any last questions? Hey, Shubhendu.
Hi, Shubhendu. Hi.
Yeah. Very interesting PPT, and
thank you.
So I would like to ask a few questions. Like, see, I've been involved in this banking sector, lending to the MSME and the agribusiness for almost 20 years now, more than 20 years. Now, one of the areas that I find you talk of impact innovations in the MSME space, I can tell you quite a good number of innovations is happening. One of the areas I can cite is sand. For example, we know that India is growing a huge amount of impetus on infrastructure, lending space, the construction funding and all that. But if you see the sand, which is so simple a commodity, we still depend on the riverbed to extract sand, mining sand. And if you see all big builders, reputed construction companies, they still depend on the sand mafia to get sand. And RBI, Government of India has come out with kind of a regulation that from 28 onwards, 20% of the sand has to be from manufactured sand and not from riverbed mining. In fact, riverbed mining is going to be banned. So I am in touch with a few companies who are looking for some bank loans, but these are kind of greenfield projects. Now, like what they want is they want to acquire some machines which from Europe. I think
so Vendu, I would just like to intervene here. That actually a classic case of circular economy.
Yes, you're right.
Yeah, carry on. So Vendu, if I hear you correctly, you are saying that innovations are happening, but when I pointed out towards lack of innovations, it essentially meant lack of innovations as far as the investment products are concerned. I mean, if you look at the investments that have happened in the impact areas or even in the mainstream areas, the instruments are hardly 3, 4. I mean, be it CCPS or common equity or CCD or OCPS. Beyond these four, we have not seen any innovative products come in and help people raise capital as far as the equity capital, patient capital is concerned. And that's where I believe that there is a major gap, and investors, LPs, and the ecosystem enablers and the regulators need to look at it and try to find a solution.
Yeah. So, if you have just 2 minutes time, I can explain on this sand and the steel part a little bit.
Sure.
Sand. Yeah. See, the lot of 2-3 companies are there who are now coming up with manufacturing sand. Like what they plan to do is, like there are a lot of construction rubbles. They want to break it down, remove the TMT portion and all that, and then using some filters and machines, they want to manufacture sand and sell it under a brand. Like we have Ashirvad Atta. Similarly, there would be a kind of a Tata Assess sand or such kind of branded sand. Like we have cement companies who are selling in 15 kg bags. Similarly, these companies are looking at commoditizing sand, selling it as a commodity in 15 kg bags or 25 kg bags. But these companies, when they look for loans, as bankers, we always look at collateral. We'll ask for whether the repayment capacity is there or not. So we are not very keen on lending to this cautious sector. So these companies are getting some kind of funds, but there is a lot of cash burn. They are incurring losses. In the steel sector also, I can tell you, India is the second biggest steel producer. But still, we have a lot of companies in Rourkela, in Jharkhand, in Durgapur belt, where the power connection has gone up. The power cost has gone up. And like they're manufacturing, say, billet from pig iron. And these billet manufacturing standalone units are no more profitable. They need to make it an integrated TMT manufacturing unit or pipe manufacturing unit. And they need to also install a power plants, like from the West Gas power plant. So these power plants cost about 40 crores, 50 crores. No banks are willing to fund them because standalone, they are not profitable as on date. And they are not able to provide us adequate collateral also. So we know that this is scalable. But then right now, these kind of small entities, MSME companies are there who are looking for investors, who are there, who have some patience, who can give this money and don't ask for returns immediately, maybe in the next 3-4 years, till the power plant, the capacity utilization break-evens, and then they are able to make profit.
So one small, add on to that, Suvendu, when you say that these businesses are not viable or not profitable, I think you possibly mean that these businesses are not profitable in their existing business models. So Correct. It requires some amount of business model innovation to ensure that they offer right kind of, financial yield. And once they do that, they will obviously become more investable and they will start attracting mainstream funds and the impact funds also.
Right. I can also cite the example of tea. So India is the largest producer of tea in the world. But if you see, out of the total production, 30% is from small tea growers who have land holding less than 1 acre. Now, these small tea growers in Assam, in West Bengal, in Tamil Nadu, in the Nilgiris, they still depend on the large corporates like Tata Tea, like Amalgamated Plantations, like Hindustan Lever, to give them initial seed funding for procuring for creating that nursery. That is immediately it is not profitable. It takes time. 18 months is the 24 months, 18 months is the minimum gestation period. And no banks are willing to fund that because they are not able to provide collateral. Okay, so initially banks tried at contract funding, lending to these multi growers, taking the corporate guarantee of these companies. But these companies have become behemoths now. They don't want to lend corporate guarantee. They're saying if you want to fund them, you finance them at your own risk. Don't ask for corporate guarantees from us. So I know of a few like small tea grower producer companies who often seek money from the money lenders, because unless they're able to produce that green tea and supply it to the corporates, they don't get the payment.
Lots of unexplored areas, and I think with
huge opportunity actually.
Yeah, model change plus injection of capital. I mean, it goes back to the point you were making that started with just microfinance and it's expanding to so many different sectors. Thank you so much, everybody, for joining, and Nilotpal for your the really very engaging content as well as presentation of it, and the Alumni Association team for hosting this. It was truly a privilege to play a small part and to learn so much today. As we saw in the chat from the Alumni Association, we'll wrap up now. We are 26 minutes over, but I'm sure you've triggered a lot of thoughts for people to reach out to you directly for your insights. Thank you once again.
Thank you, Amrish. Thank you, Pradanya, and thank you everybody for taking time out to have this discussion. Thank you, Suvendu, for very passionate point on that innovation, product innovation. It's a very interesting subject, and I hope this discussion has been useful. It has. I have personally learned a lot in the course of last hour and a half, and we look forward to many more such discussions. Thank you.
Thank you.
Thank you so much, Pathak sir, for such an amazing and insightful session. It gives a feeling of joy and accomplishment to listen to a person who has such diverse skills and very practical and deep understanding of impact investment, and that too from scratch. I also liked your emphasis on how impact is the first parameter to be considered while generating financial gains, and the roles of our investors, regulators, employees, beneficiaries, and all the other stakeholders that are present. Thank you so much for the excellent session, sir. I would also like to thank today's moderator, Mr. Amrish Mohan sir, for wonderfully facilitating this session. You made the session more livelier and more comprehensible. The session was very interactive. I thank all the audience for giving something as valuable as your time and your opinions as well. I apologize for exceeding the session a little more than expected, but I believe that is because the session was so interesting that we wanted to continue. Sir, with your due permission, I would like to wrap this session now.
Absolutely. Thanks a lot.
And we will be uploading the session on YouTube. And yeah, so I'm stopping the recording now. And thank you so much, all of you, for joining us today. And have a great weekend. Thank you.
Thank you. Bye. Thank you.
Bye. Thank you, sir.